All right, class, in this lesson, we are going to learn to state the basic vocabulary of business organizations and then compute financial responsibility of business ownership based on ratios and percentages. All right, so let's get some background information here. So, how do businesses start? Well, one of the terms that is used is called capital, and this is money that is used to start or expand a business. Now, a business can be a sole proprietorship. This is where you typically have one person owning the business. There's also what's called an S corporation, a LLC, which is a limited liability corporation, or a C corporation. Companies like Coca-Cola, ExxonMobil, the Fortune 500 companies are typically set up as C corporation. How a company is organized, so how they're set up, affects their liability. So as an example, a sole proprietor does not have any protection, and so if the business is ever sued, the personal asset of the owner can be affected in a liability situation. Whereas if a company or a corporation is set up as an S corporation or an LLC, or a partnership like a law firm, their liability is limited to what is in the business. Now, you may have heard of the term EBIT or EBITDA, EBITDA. Those are acronyms for earnings before interest, taxes, depreciation, and amortization. And this is a term that is used to determine quote-unquote profit, which is essentially revenue minus expenses. With companies or organizations, there will be interest factored into it. There are taxes that they have to pay. There are depreciation involved in, let's say, equipment or machinery or computers, and then amortization. And so those are also computed to determine net profit. But for simplicity's sake, when we're talking about, let's say, net income or profit, the term EBITDA is normally used. Now, each owner who invests money in a corporation receives shares of stock in the corporation, and the owners are called shareholders. And then stock certificates are used or issued as proof of ownership. Unlike a sole proprietorship and partnerships, the shareholders in a corporation have limited liability. Each owner cannot lose more than the value of his or her share of the business. So I incorrectly stated earlier on that partnerships are a part of that. I should not have said that. So proprietorship and partnerships do have some liability in that their ownership in the organization can affect their personal assets. Whereas the S corporation, LLC, and C corporations are limited to their share of the business. Now, the difference between a private corporation and a public corporation is that shares of a private corporation are not available to the public, whereas shares in a public corporation is available to anybody, and that's usually purchased on a stock exchange. Okay, so that's some brief background on business organizations. Let's go ahead and move on to some examples so you understand how shares and percentage of shares are calculated in a business. So in this example, example 1, we have Michelle that invests $15,000 in a partnership that has 4 other partners. The total investment of all partners is $240,000. What percent of the business does Michelle own? Okay, so to calculate this, we would take her investment, which is $15,000, and we divide that by 240,000, which is the total amount of investment. And if we punch that ratio into the calculator, we would get 0.0625 or 6.25% of the business that Michelle would own. All right, so let's go ahead and move on to example 2. The total number of shares of stock in Bulls Corporation is 650,000 shares. Mike owns 12% of the shares. The question here is, how many shares of Bulls Corporation stock does he own? Okay, so the calculation here is 650,000 shares. That's the total number of shares. And we're going to multiply that by 12%. And punching that into the calculator, we would get 78,000 shares. Okay, so that's how much he owns, or what 12% would represent. Okay, now remember, when you make this calculation, that 12% needs to be converted into decimal. So it'll be 650,000 times 0.12. Okay, let's go ahead and move on to our last example, example 3. 3 partners are investing a total of $900,000 to open a garden and landscaping store. Their investments are in the ratio of 2 to 3 to 5. How much does the partner that invested the least contribute? All right, so the way to determine this is we have to figure out how much each of the ratio is relative to the 900,000. So we're going to let 2x represent the amount invested by the first partner, and then 3x represent the amount invested by the second partner, and then 5x represented by the amount represented by the third partner, and that will equal the $900,000 in investments. And so if we were to go ahead and calculate the value of x, we'd find that x is 90,000. Okay, now the partner that invested the least was 2x. So that's going to be 2 times 90,000, which works out to $180,000. So that would be the contribution of the partner that invested the least. Okay? All right, hopefully that made sense. If any of this was confusing to you, please go back to the beginning of the recording and listen to it again. Thank you.